Let's begin by just looking at the main reason why you bought this, why you bought Leeuw.
Is a really good complementary fit. We're busy building a large-scale, by our terms, a large-scale Eskom producing mine near Delmas in Mpumalanga. It's on a long life, long contract. Not particularly exciting, but it gives us a good operating base. What we're buying here with getting involved with JPI Leeuw and Associates in their operation is an export anthracite producer that also produces for the domestic market and that has a string of well-advanced projects. So it gives us growth opportunity and complementary products.
What about the export side of it? Isn't the export side the main attraction here? Because now suddenly, apart from supplying Eskom, you now have ability to look at markets beyond South Africa. And we do know there's been an issue around the prices paid by Eskom and the prices that producers are able to get internationally.
Interestingly, this is completely unrelated to that argument because Leeuw Mining is an anthracite exporter, which is used in the metallurgical industries around the world and has nothing to do with thermal coal used for Eskom. But it is a foothold in exports. Leeuw Mining is a participant in the Quattro scheme at RBCT. So that was important for us. It's more about having a diversity of businesses and a diversity of products supplying a diversity of customers. So what it does is it adds something more interesting to Keaton, and it also adds these development projects. I want to emphasize this isn't only about buying a single operating asset.
Sure.
This is also about buying a number of projects. The Leeuw Mining team have worked very hard for a long time to advance these projects. They've got surface rights, they've got mining rights. The regulatory work that they've done has been exceptional.
Yeah, you're paying about 75 million rand for this transaction, most of it through the issue of stock. Just in terms of pricing it, how fair a price do you think that is?
Now look, there's a lot of opportunity in the Leeuw Mining assets, so we're very comfortable with the price we've paid. Remember, we've issued 75 million rands worth of shares, or will issue 75 million rands worth of shares, plus a further 10 million because we're settling a convertible loan. Those shares we're issuing to the current holders of the stock, and they're immediately on selling them to Gunvor, or an affiliate of Gunvor, who are a Geneva-based international energy trader. Gunvor will ultimately own between 20 and 25% of Keaton Energy, which brings us a really significant new shareholder in our shareholder base.
So in terms of the overall Keaton production base, what percent does this add?
Well, this immediately adds about 500,000 tonnes a year, and bearing in mind that our Van Gaatfontein project will hit about 2.5 million tonnes a year, it'll take us immediately to 3 million tonnes. The projects within the portfolio within Leeuw could add at least another 1 million tonnes, so it takes us to 4, and it brings us a lot closer to our ultimate objective of producing 5 million tonnes a year.
Yeah. While you're here, you might as well give us an update on those other projects, including Van Gaatfontein. Where are we?
Oh, it's going relatively well. We had a very wet December, which was the month that we were commissioning our 5-seam plant. It's been much better in January. We've been delivering significant amounts of metallurgical coal into the local market, and we are on track to start first deliveries to Eskom in May.
Paul Miller, CEO, Keaton Energy, thanks very much indeed for joining us today.